So, Mr. Jarman, thank you very much indeed for joining us on your first ever Joinery Hour, hopefully not the last. So for those that don't know who you are and what you do, could you just introduce yourself, your business, and tell us a bit about yourself?
Absolutely. And yeah, thank you for having me. Honored to be here.
Thank you.
I'm Simon Jarman. I've been in the glazing industry, home improvement industry for some 30 years now. I started my career in 1995 with Everest as a management accountant, and I ended up eventually being CFO and then CEO of that business for around 8 years. And then since then, I've been in and out of the industry. And then in 2023, finally decided to take the leap and start my own business, which is Clever Bean Accounting. And what we do is offer accounting and business advisory services for window and door glazing and home improvement businesses. And I guess the kind of the USP of the business is we don't just do your year-end accounts. We actually help you make a better business, grow, become more profitable, become more efficient. And we do that through giving you the data that you need to understand what's working in your business and what isn't.
Sure, perfect. So, I mean, as you say, you've been in the fenestration and home improvements for over 30 years. So what common financial challenges do you see businesses facing on repeat again and again? Well, probably a long list.
Yeah, I think it depends to an extent on the size of the business. I'm mainly working with smaller businesses, talking turnover maybe up to say £10 million. And one of the most typical ones is not having enough cash. So many businesses just struggle from day to day, week to week without enough cash in the bank. Not making enough profit. So what I see is business owners working exceptionally hard, making a nice business, but somehow just never having enough profit on the accounts or enough cash in the bank. Trying to grow sales, trying to drive that business on, but finding that they just keep hitting a stumbling block or a brick wall, not knowing how to fix that problem. I see a lot of small businesses being overwhelmed, that the owner's trying to do everything. He's got to be the managing director, the sales director, the IT director, the marketing director, and just trying to fulfill all of those roles is a real challenge. I think one of the biggest financial issues is not having any measurement systems. There's very little, certainly in smaller businesses, measurement going on. And therefore, businesses don't know where they're being efficient. They don't know where the profit leaks are. They don't know what's working in their business, what isn't. Pricing, I think, is a huge issue. I think it's a much misunderstood area. And I think that causes a lot of problems. Not understanding your gross margins, having an overhead base that's too big for your level of turnover, for the size of business that you've got, too high a level of fixed costs. And in many cases, not knowing the most efficient way for a business owner to pay themselves from the business.
Right, so basically everything. Now I can tell you now that's amazing because I speak to a lot of joinery companies, as you can imagine, and they are in the joinery world, small to medium businesses. In the real world, with no disrespect, probably micro business. A lot of them, these businesses are £500,000. A sort of our sweet spot, decent sized joinery company is sort of £2 million. So they're small businesses, right? And all of the above is absolutely relevant. So even when businesses are busy and they're winning jobs, why do you think they're still struggling to see that profit in the bank? I know you've just at a high level named quite a few reasons, but do you think is the most important?
So that they might be busy, but they're generally leaking profit somewhere. And more often than not, they're leaking it in more than one place.
Right.
Could be their material costs, it could be waste, it could be their labour cost, could be sales, could be marketing, could be in all sorts of areas. But generally, they will be leaking something. They just don't know that they're leaking it, or if they do know they're leaking, they don't know where they're leaking it.
Sure. And so obviously you're an expert in this industry, in the glass glazing, joinery, home improvement side. So how do you think the joinery and glazing industry differs from other sectors when it comes to managing profitability? Because if you look at a lot of other sectors, they have a real handle on KPIs, sales, funnels, etc. Is the biggest thing the measurements, as in measuring the KPIs, or what is your view on that?
I don't think it's that the joinery and glazing sectors particularly differ from others. I think it's more about the size of business generally.
Right.
I think larger businesses tend to have big teams. They tend to have a full finance team. They have lots of different roles and resources, and it's common for this kind of structure and process to exist. In a smaller business, it tends not to be the case. I think in a smaller business, people will fall into one of kind of three main categories. You're either an entrepreneur, the person that has the vision and the ideas for the business. You're a manager, the person that leads people and puts structure and process in place. Or you're the technician. And the technician is the person that knows how to do the job that business has been set up to do. And in a small business, it's often the technician that sets that business up. They've worked for somebody else. They know how to do the job. They then decide to set up in business on their own account, and they miss the entrepreneur and they miss the manager. They're the person that's good at doing the job. And that's why the structure and the process and the management of the numbers and the measurement does tend to get missed.
Sure.
And that makes absolute sense when you look at something, when you're looking at joinery businesses, when you're looking at window installation businesses, because it is normally the technician that's driving that. It's not normally somebody who's going in with an entrepreneurial attitude. And now, in the 80s, of course it was, but now it's definitely down to, I can do this job, but I don't necessarily have those other skills in order to be able to win.
What you're not going to get is a seasoned business person just suddenly out of the blue go, do you know what? I think I'll set up a joinery business.
No.
What you're going to get is someone who's steeped in joinery skills, who's, I'm going to set up a joinery business, but they're often missing that business experience. And I think certainly for the window and door business, it's quite interesting because the window and door sector, because you've got the installers at the front end, and the installers are supported by this huge supply chain of fabricators, system houses, glass processors, hardware businesses. And all of that supply chain relies on the installers. If the installers don't do well, none of that sector does well. And so what we're relying on is a base of technicians as opposed to a base of business people. And that's not a healthy place for the industry, I think. And finding a way of educating that base and making them the more rounded technician plus entrepreneur plus manager is what will help our business grow in the long term. But it's a big beast, and it's not an easy nut to crack.
Yeah, absolutely.
So is there a toolbox?
I don't think
because the technicians understand that sort of language. Is it something we can teach?
I think it's for organizations like this one and other organizations and suppliers that support the industry to try and put in place education programs, to try and provide that kind of support and a knowledge base. But it's not a kind of cookie cutter approach, I don't think.
No.
No.
So
I thought you were going to say that.
yeah. but it's interesting, and it's interesting that you see it at the installation point, and I get why, and that's something I hadn't considered. So we'll have a good think about that. But you touched on profit leaks. What are some cracking examples of profit leaks where people have not even realised that they're hemorrhaging that money?
So they tend to be fairly consistent between the businesses. Probably one of the biggest ones is underpricing due to poor pricing calculations, not understanding how to put the pricing together correctly in the first place. Over discounting is a big one, also related to pricing. Trying to win work, the kind of whole race to the bottom thing, which is unfortunately far too prevalent. Just not understanding how best to resource the business, whether that's in manufacturing or installations, just carrying too much labour. Having poor pay schemes, I see that, particularly on window installation side, where people are paid fixed salaries and have low productivity. Borrowing expensive money is one I see fairly regularly. And that's linked to the cash problem I was talking about earlier. Cash-strapped businesses will often rush out and try and get some finance into the business. But in doing so, they can sometimes end up with very, very cheap loans. For a manufacturing business, often too much cash tied up in stock.
Right. Okay. So if I'm a small joinery manufacturer and I suspect I'm leaking profit, what is the one and only first number that you would go to as a starting point?
Gross profit margin. For me, the gross profit margin is an absolutely critical KPI. And if it's not high enough, it doesn't matter how much sales you've got, you're just going to be a busy fool.
Yeah, absolutely. And we have seen this. We've got Aaron Woodger that works with, he's a mentor in the industry and a director of Joinery Network, and he's worked with a fairly reasonable sized group of our guys. And I've spoken to lots and lots of joinery companies, and I'll be honest, a lot of not just joinery companies, but a lot of small businesses actually couldn't even tell you what gross profit they're making and what the difference between gross and net is, which is a scary thought, but it's a realistic thought. And like you say, that is down to the fact that it's the technician that is really, really good at making the timber windows and doors and getting them out the door on time, etc. But they haven't ever learnt that side of the business. Whilst it's a scary thought, like I say, it's a realistic one. So
when you ask most small business owners what their gross profit is, the answer they will give you is what they're pricing it at. So I'm trying to price to make a 35% gross margin. You ask them, they'll say 35%. But that's what they're trying to achieve, not what they're actually achieving.
Yeah.
And they don't measure what they're actually achieving. And the reality that I see is I've yet to see a business that's actually making the gross profit that it thinks it's making.
Interesting. Okay.
And that's typically because, first of all, they're not pricing it correctly. And secondly, the actual costs are way more than they anticipated that they would be. Yeah.
So how does joinery companies move away from, and I see a lot of this, market rate guessing? So they haven't done their due diligence. They don't really know what joinery company up the road is really charging. They are literally guessing at the market rate, and some of them guess well, some of them guess terribly under, some of them guess terribly over. But how do they get away from that and actually price based on their real job cost and what they do need to achieve?
So the first thing is you've got to understand exactly what your costs are. If you don't know what your costs are and what goes into the job, you cannot correctly price. So you've got to build a cost model. you've got to put in a system of data capture that means that you know exactly what your material costs are, what your labor costs are, what your overhead costs are, what your sales costs are, what your marketing costs are, what your waste is, how much time you're spending on rework, what your material optimization is. You've got to capture all of this stuff. And then when you know these numbers, you've then got all the data you need to add on a markup in order to be able to get to your desired gross margin. But then it's really important that you understand the difference between markup and margin. A lot of small businesses don't. What they'll say is, oh, I put 50% on that job. And they think that means they're making a 50% gross margin. It's not. That's a 33% gross margin. So understanding that difference is key. And I won't go into it in any more detail here because it's a kind of a whole discussion in its own right. And then one of the things that I see a lot is people tend to measure their margin in pounds rather than percentages. Oh, I made £1,000 on that job. I'm really, really pleased with that. That was a good outcome. Okay, well, what was the turnover on that job? Oh, it was 10 grand. Okay, so that's a 10% gross margin you've made there, right? And you're a £1 million turnover business. So that means that if we extrapolate that through, your gross margin for your whole year is going to be about £100,000, 10% of £1 million. But you've got an overhead base of 200,000, yet you're happy with that job. It makes no sense. You've got to measure your gross margin in percentages, not in pounds. And a realistic target has got to be a minimum of 30%. Need to be making 30% or more. And you've got to understand what's going into that gross margin. A lot of people miss costs out. So anything that's directly attributable to that job needs to go into that, even if it's to some extent a fixed cost. So one I see that's left out a lot, for example, is van leases. If you've got an installation business and you're running 5 vans, you've got to factor that cost in when you're doing your pricing. Many people don't.
Yeah, sure. You've answered my sort of the next question, so we'll skip that. But can you give us a real life example where a business thought they were making money on a job and making good money, and you've dug into numbers and they're actually losing? Obviously, don't mention the company name.
I think it's not so much that they think they're making money and they're not. I think it tends more to be they actually have no idea what they're making, whether they are making money or not. They have what I call a year-end accountant, most businesses, which means they only see information once a year, and it's always out of date. So, a couple of examples. So I was at a business recently, and this is a glazing business, not a timber business, but we looked at their numbers and we created a set of management accounts for them, which is the first time they'd ever seen it. And the first thing we saw was that their installation cost as a percentage of sales was 35%. Now, for a business of that size, it should be around 20% or thereabouts. And this is a £1 million turnover business. So they've got a 15% differential from where they should be, which is £150,000. They were overspending on installations. And it turned out they were putting a lot of labourers on jobs that should have been for 2 people. They were paying day rates, which encouraged everybody to go slowly. So that there was no targeting, no productivity measures, no quality measures. And worst of all, when it came to scheduling new jobs, they were basing the amount of resource they needed on this inefficient past. So that was a huge one, and one that's relatively easily fixed. I put that business in touch with a number of other similar businesses and got them talking about how they resource that particular part of their business. And I've almost instantly gone from a 35% and they're now trending down to the sort of 20% they should be. So significant saving. Another one was a business that we did the same thing, and we found they got 16% marketing costs. This is a much bigger business. It's like a 4 million turnover business. So they were spending, you know, £600,000 a year on marketing. And a business like that should be spending between 5 and 10%. So they were spending effectively double what they should be. And I helped them understand where they were inefficient on the marketing spend, how they could change it, and again that they're starting to drive it down now towards sort of 8% marketing spend, saving them some kind of £300,000 a year.
Wow! So these are two of the most words my customers will recognise me saying: reactive and proactive. And I'm always bleating on that we need to get away from, as a joinery sector, get away from being reactive and start being proactive in everything we do, especially decision making. So what does that look like in practice for a joinery manufacturer?
I think it means using data-driven decision making. So you're making informed decisions. I think the first thing is to identify what the key KPIs for your particular business are. They will differ depending on the type of business, but there will be some obvious ones: turnover, gross margin, overhead level, etc. Identify those. Next job is to set up a system of data capture to make sure that you can regularly capture that data that is key to your business, and then set up a structured review process. Once you're able to produce those KPIs, you must review them on a daily, weekly, or monthly basis, depending on what the KPI is. There are some that you'll need to look at every single day. Output, for example. So some that you can look at a little bit less often. Then I would say create a forecast, produce monthly management accounts, do variance analysis between your accounts and the forecast that you've created, and employ, I guess, what is kind of simple control theory. Anyone that's ever studied control theory, you set a plan. You then start doing something. You then measure the output of what you've done against that original plan. And then if there's any variance, you course correct and you start again. That's what this process is. You set a plan, you set a target, you have a target for your KPIs, you have a forecast. You then do the work, you measure the output of that work, and when you've got differences, you figure out why they're different and you correct, and then you go again. And it's a constant loop. That's what good businesses do.
Absolutely. You've just scared the living daylights of all of our customers, you know that. But it's simple. It's the fundamental basics in reality, because this all links together nicely. So if you haven't got a plan, where are you actually heading? It's like getting in your car and just driving. If you don't know where you're going, you're just going to be driving around forever pointlessly burning fuel, right? So, and going back a step to the year-end accounting, again, I hear that a lot. People at the end of the year, they either celebrate hugely because they've made a stack load of money, or they drown their sorrows massively because they've just lost loads of money throughout a 12-month period and never reacted to any of those red flags month on month on month because they didn't even see the red flag. It's a disaster, right? So, and this comes into the budgeting and forecasting. So what you've just said is perfect sense, but it's going to sound massively, I think, intimidating is an understatement for a small business. So how can a small joinery business or a small business in general create a simple, useful budget without drowning in spreadsheets and being overwhelmed by, I hear it all the time, the go-to excuse is, I haven't got time to do all of that. And you think, but it's going to save you so much time and so much pain and so much money. That's the first thing you should be prioritizing. How do we get over that? How have you got over that in the past with small businesses?
So I mean, just to touch very, very briefly on the year-end accounting thing before I go on to the budgets. Your statutory accounts are due 9 months after your year end. That means your data is up to 21 months out of date. So you just do not see those early warning signs. The other thing is that statutory accounts don't have a lot of information in them. They don't tell you the nitty gritty of your business. So even if you're doing statutory accounts on a monthly basis, it still wouldn't be enough to give you those early warning signs. In terms of the budgeting, I would say start simple. You know, having something is better than nothing. You can evolve it over time. And the first thing to do would be just start with last year's numbers. You know, what are my run rates? Maybe if you've made big improvements over the last 12 months, then don't look at your last 12 months numbers, but look at your last 3 months numbers or your last 6 months numbers and use the run rate of those as the basis to start a budget for next year. Do it on a line by line basis. So have a line for every different element of your sales, each individual product type, for example. All of your different costs need to have a line. And then you adjust for known changes. What's going to be different next year to what we've just seen in the last 6 months? Who are we hiring? What new roles are they going to be? What inflationary increases are we going to incur? Wage costs, etc. What are we going to be hit by the government? So, you know, in this last few months, we've seen big changes on national insurance, for example, minimum wage, these type of things. So you then overlay those kind of known amendments. If you've got a plan to grow sales, then bring in some additional sales onto the top line, but also bring in the costs associated with driving that additional growth. And then that becomes your plan for the year. You need to break it down by month so that you've got a profit for every single month in your budget. And then that becomes something you can then compare your actual results on a month by month basis with your management accounts. But keep it simple, keep it to one page.
Sure. And
it can become more sophisticated over time.
Absolutely. And you can obviously help with all of that. We'll come on to that in a bit. But the difference between a budget and a forecast, can you explain that very briefly, very simply? Because that's about as just as complicated for these guys as gross profit, net profit. It's what are the fundamental differences?
Well, they are broadly the same thing. The usual terminology is that you only do a budget once a year, and it's your plan for the year. It's your roadmap, and it's kind of set in stone. It gives you your goal, something to shoot for. Your forecast is an update. So typically, businesses would do a budget at the beginning of the year, and they do a reforecast maybe at the 6-month point, halfway through the year, which would just update the budget for known changes, things that have happened in the last 6 months.
Sure. Okay. And have you got an example of how better forecast in recent times with a business you're working with has helped a business either take advantage of opportunity or avoid a crisis?
I think what the forecast or the budget kind of really gives you is it's that control system that we were talking about. If you're missing your forecast every single month, then you look into what's going wrong, which bit of this isn't working, and then you can take some action. But a key one would be to do a cash flow forecast. If you're forecasting what your cash is going to be for the next, let's say, 13 weeks, and you're doing that on a weekly basis, so you start with your opening bank balance, you put in all your expected ins and outs in cash for the week, and at the end of that week, you've got your predicted closing bank balance, and then you roll that forward for 13 weeks. What that lets you see is where the pinch points are. Yeah. At which points do I have sufficient cash, and at which points in the next 13 weeks is it going to get really, really tight? And if you can see that some weeks in advance, you can normally do something about it. But if you get to that pinch point and you're only a week away, normally it's too late. So a cash flow forecast is a huge way of averting a crisis.
And another hugely scary thing for people to have to try and deal with. So is there tools, or if they were to get in bed with you, so to speak, is there a way that can be given to them, as Sarah says, as a toolbox to go, here's how you do it, a cash flow. This is, you can easily, I don't know, export the data from Xero or from a bank, or is there a way of doing that easily, quickly?
Yeah, what we tend to do is give the company the tools to do the cash flow forecast themselves, because that only the business knows when certain customers are going to pay. Only the business knows when they're going to pay certain suppliers. But we will give them a model, a structured model, and show them how to use it so that they can do their own cash flow forecasting. And I think it's one of the most useful tools any small business can ever have.
And if if they've got the tools and they've got the structure and they've been taught, how much time in reality should a small business be needing to spend on a cash flow forecast to manage their expectation?
Once you get used to doing it and it becomes second nature, it's no more than an hour or two a week.
Yeah, perfect. Okay. So let's get on to your company, your business, Simon, Clever Bean Accounting. So you've already said at the start, you're not a typical just an accountant. So how is your monthly hand-in-hand sort of approach different to a traditional model? Just give us a bit of an overview of how much more we can expect, or our companies can expect from you as opposed to their normal accountant.
I think there's two main differences. First of all, most normal accountants deal with a whole multitude of different sectors. So the accountant that's looking after your joinery business or your window business is also looking after taxi drivers and hairdressers and architects and whatever else it might be. We only work with businesses in the glazing and home improvement space. And that means we understand the business better. We know who all the suppliers are. We know the terminology. We speak the language. And for me personally, I've run a business in that space. So that's the first thing. The second thing is, whilst most accountants are focused on what I would call compliance, the regulatory stuff, the stuff you have to do, year-end accounts, corporation tax return, payroll, VAT, confirmation statements, CIS returns, the things that don't add any value to your business but have to be done. Our focus is, yes, we'll do those, but our focus is actually we want to help you become a better business. And we'll do that by most of the stuff we've been talking today. We'll help you put in the systems to capture the data. We'll help you set the KPIs that you need to measure. We'll help you measure them. We'll produce you a budget. We'll do your reforecast for you, working with you. We'll show you how to do a cash flow forecast. And most importantly, when we produce your monthly management accounts, we'll have a monthly meeting with you, usually via Teams, and we'll help you interpret those accounts. What do those results actually mean? And what are the top 3 to 5 actions that you need to take off the back of that in order to fix things?
Massively important. Yeah. And I can see why you say hand-in-hand approach. So if a joinery manufacturer, I think you've sort of covered how it would improve a business, but if a joinery manufacturer wanted to work with you, what would that first month or months look like in the process? Obviously, pick the phone up. That would be a good start. But after that, what does that look like, onboarding? So
there's a sort of regulatory onboarding process that involves collection of data and photocopies of passports and that kind of thing. But then once we get past that, the first thing we do is an initial review of both the business and the accounts. What condition is your data currently in? And we need to understand all about the nuances of your particular business. What is it you're doing? What are your goals? What are your challenges? The second thing we do is clean up of the accounts, because it's very rare that there isn't some kind of cleanup that needs to be done. I'm still to find one. The next stage is, well, I call it data capture configuration. I still haven't found a better term for it, but it's making sure that going forwards, if these are the key KPIs for the business, we have the ability to collect the data that will then produce those KPIs, and that normally involves a different approach from the client in terms of how they record and manage their data, and then we'll produce the first set of management accounts. And out of that, there's normally something that's obviously wrong. There's normally just like a big elephant in the room that jumps off the page. I've given a couple of examples earlier of the business that was at 35% installation costs, for example. And the key is initially just to keep it simple and focus on that one thing, because that's the low-hanging fruit. And fixing that will instantly make a big difference and probably result in a cost saving or a business improvement that pays back our fees many, many times over. Once that's done, it becomes an iterative process. You then move on to the next biggest thing and fix that. And then you fine tune and fine tune. It becomes an evolution. And the result is often a more relaxed business owner, not just because their business is getting better, but often once we get on board, they feel like they've got someone to talk to. They're not just doing it all on their own. It's a lonely place being a business owner, and they often suffer from overwhelm. And I think just having a bit of a partner can help relieve some of that stress.
Yeah, I would agree. And the fact that these are typically very small businesses, there is, perhaps one business owner, they haven't even got a partner to bounce off of. And yeah, I totally agree. So I think I know the answer to these questions. Sorry.
I was also going to say that quite often the account side of it gets left to somebody else. So actually the process of doing the accounts, like doing the invoicing or pulling in money and those sort of things, they get sent off to somebody else. So you don't necessarily, as a business owner, you don't necessarily have visibility of it until it's too late. So until you've got a debt that's outstanding, or until you've got, you don't know what all of those things are, because it's just being done in the background. Whereas if you're manufacturing something, you can see immediately whether there's a mistake or something. So I think it's that level of visibility as well.
I think that's an incredibly good point, Sarah. That the bookkeeping is actually the most important part of this. And there's bookkeeping and there's bookkeeping. And more often than not, the bookkeeping is done by an unqualified person, someone that's got no formal training in bookkeeping or any kind of background accountancy knowledge. And they don't know what they don't know. So they're blindly doing it wrong most of the time. And that means that they're falling short of their regulatory obligations to keep correct accounting records, but also they're not producing data that's actually useful for decision making.
Yeah.
And if you don't get that bit right, then actually we can't help. So we will work with business owners. In many cases, we'll do the bookkeeping for them. But in the cases that we don't, we will work very closely with that bookkeeper and give them the systems and the training to make sure that the output is right.
Absolutely. So I think this is more of recaps because you've covered everything fantastically well. So thank you. But so if you could give joinery businesses just one habit to improve their profitability, what would it be?
Measure your key metrics every week.
Every week?
Every week, yeah.
So not every job, every week.
So for me, job profitability is important, but it doesn't come first because it's harder to capture the data by job than it is overall. And if you capture your business correctly overall for a whole business, there's almost always something that you can see that you can make improvements on.
Yeah.
What you don't want to try and do is solve world hunger day one. and there's a high degree of sophistication required to capture job costings accurately. So I would say no, don't do that to start with. Let's work on that 12 months down the line or 18 months down on the line when we've done the easy stuff.
Yeah. And the number one number that every business owner should check weekly?
I think it's that cash flow forecast, because if your committed outgoings are more than your cash in the bank, you've got a real problem.
Yeah.
So I think that's the number one.
And what's the most surprising piece of financial advice you've ever given that made a big difference to a client?
I think surprising to me is the lack of understanding around marketing and how marketing works in a business. So too many of my clients and the industry as a whole, kind of their idea of marketing is to stare really hard at the phone and hope it's going to ring. But kind of the next level up is it'll be so okay. So I spent £50,000 on marketing last year. That's a huge amount of money, and it really hurts me. But the question I will then ask is, well, how much revenue did that generate?
And their answer is, I don't know.
And well, or they do know, and the answer will be, I had one where they were generating £1 million of revenue from that £50,000 worth of spend, but he begrudged that £50,000. Whereas to me, well, hang on a minute, you'll spend that's 5% marketing cost of sale. For every £5 you're spending, you're getting £100 in sales. Now, this particular guy was like, well, I don't know how to grow my business. Well, have you
Spent 100 grand.
Spent 100,000.
100 grand and getting
2 million.
But I mean, that is very, very, very common.
Yeah.
And I think that it's surprising to me that people don't understand that in order to grow your business, you have to invest in sales and marketing, and you have to do it wisely, and you do it step by step, and you don't double the spend. You figure out what's working and what isn't, and you test and learn, and you grow incrementally. But if you want scale, then you've got to understand the sales and marketing side of your business. Absolutely.
It was funny you say that. I was talking to my best mate actually on the way to Lights this morning, because we're live from Harlow. So I was talking about his business. He's in a big, I won't name it, but a big operation, injection molding company. And he said, yeah, we use agents sometimes, and they bring a job, and it'll be like a £3 million job, and they'll want 5.5%. And it's great at day one when we take the job on, and the salespeople are like, oh yeah, wow, 5.5%, that's a £3 million job, let's go. And then as they're getting paid out 2 months down the line, all the same people are going, why are we paying this guy 5.5%? Why is he taking this money from us? Like, we're just burning cash. What's the point? Hold on, they bought you £3 million job. And all of a sudden it's gone from the cost of sale almost to this is just a cost for nothing. Why am I paying this cost? It's mad, isn't it? Like mindset.
Yeah, it's almost the same point that you're making, I think. Yeah,
exactly that. Yeah, it's crazy, really. But it is a mindset thing. So before we go back to the floor and have some interesting conversation, I'm sure, obviously a lot of our customers are going to feel overwhelmed by everything you've said, and I know they will, because we've had these conversations time and time. So what would be your advice in taking a first step towards more control, better profit?
Start small. Pick 2 or 3 KPIs, put in the systems needed to capture the data to create those KPIs, and make it a habit to review them regularly with your team.
That is brilliant advice, Simon. Thank you very much. We'll go back to the floor.